Welcome to The Explainer. So let's talk about gold. You've probably seen the headlines. Prices are going through the roof. It's got everyone buzzing. So today we're going to dig in and figure out what is really going on here. All right, let's just start with the number that's got everybody's attention. $3,683 per troy ounce. I mean, wow. And let's be super clear here. That's not just a new high for the year. That is the all-time record spot price for gold. We're talking historic. And get this isn't some slow burn, a gradual climb over years. Nope. We're talking a massive 43% surge just this year. That kind of explosion in price, well, it's creating this perfect storm of excitement for people who are already in, and just a massive case of FOMO, fear of missing out, for literally everyone else watching from the sidelines. So, yeah, what is going on? How in the world did we get here this fast? Let's unpack the story behind this absolutely record-breaking rally. We'll look at what's fueling it, and, maybe most importantly, what it could mean for you if you're an investor staring at these prices. And here's something you really need to get. This is not just a US dollar thing at all. We're seeing these record highs in local currencies all across the globe. Take India, for instance. Prices have just blown past 110,000 rupees. It just goes to show you how massive and, well, global this gold rush really is. Okay, so let's get to the why. Why is this happening now? It pretty much boils down to three really powerful forces that are all hitting at the exact same time. It's like they're creating the perfect environment for gold to just shine. First up, you have to remember gold's classic role, right? I mean, for centuries, whenever the world gets a little shaky, a little uncertain, what do investors do? They run back to gold. It's what we call a safe haven asset. Basically, it's a place to park your wealth when everything else feels like it's on shaky ground. And that's exactly what's happening right now. You've got all this geopolitical anxiety floating around, trade tensions, conflicts, the works. Then you've got central banks, especially over in Asia, buying up gold like crazy to move away from the dollar. And the cherry on top, the US Fed is dropping hints about cutting interest rates. That makes holding gold, which doesn't pay you any interest, suddenly look a whole lot more attractive. It's a perfect storm. But hold on. Before you get too excited and think about jumping in at these crazy highs, history has a little warning for us. Because, believe it or not, we've seen this movie before. And this leads us to the million-dollar question, or I guess the $3,600 question that every investor needs to be asking right now. Is this rally for real? Is it built on something solid? Or is this just a big bubble pumped up by speculative cash that could just disappear in a puff of smoke? You just have to rewind the clock to 2011. Gold hit a record high back then too, and for a lot of the same reasons. But here's the cautionary tale. For the folks who bought in right at the very top, that party didn't end well. It wasn't a quick drop. It was a long, painful, bruising, multi-year slide. It's a pretty harsh reminder that what goes straight up can also come straight down. So here's the bottom line. This rally is fragile. It's standing on shaky ground. Think about it. Any number of things could knock it over. What if the Fed doesn't cut rates as fast as everyone wants? What if some of these global tensions start to ease up? Heck, what if the early birds just decide it's time to cash out and take their profits? Any one of those things could send prices tumbling, and fast. Okay, so with all that risk, what's the smart way to think about gold? The big shift in mindset is this. Stop seeing it as a lottery ticket and start seeing it for what it is, a very specific, strategic tool in your overall investment toolbox. Probably the best way to look at it is like insurance, portfolio insurance. Its job isn't to make you rich overnight. Its job is to protect your other investments. It's there to hold its ground when other things, like your stocks, are taking a nosedive. So what does that actually look like? Well, most experts seem to agree that a sensible amount is somewhere in the ballpark of 10 to 15% of your total portfolio. That's enough to act as a real hedge, but it's not a crazy all-in bet on one single thing. It really all comes back to that one super simple piece of advice. Treat it as a hedge, not a jackpot, right? It's about protection, not trying to hit the big one. Now, it's funny, gold's been getting all the attention, but its little cousin, silver, has been having a party of its own. It's on a tear, hitting its highest price in 14 years. But the interesting part is it's rallying for some slightly different reasons. And here's the key difference between them, their identity. Gold is pretty much a pure safe haven play. It's driven by fear. Silver, on the other hand, kind of has this dual personality. See, a huge chunk of silver's demand comes from industry. It's a critical component in all sorts of modern tech. We're talking solar panels, batteries for electric vehicles, semiconductors, you name it. But that's a double-edged sword. It means silver's price is also tied to how well the global economy is doing. If things slow down, silver could get hit a lot harder than gold. And when you zoom out, the story for both of these metals really comes back to one fundamental truth. Yeah, of course they do well when the world looks fragile and uncertain, but you have to remember this. Any rally that's built on a foundation of fear is, well, it's also going to be fragile. And that really leaves us with the big takeaway question, doesn't it? In a world that feels more and more fragile, how do you, as an investor, balance that real need for protection with the huge risk of just getting caught up in a rally that's built on fear? Figuring out the difference between the two, well, that's everything.